So welcome to the second panel, I believe, for the day. I have gentlemen with me. So I picked the middle spot because why not? But yeah, this is so exciting for me. Again, just because, you're going to find out why. But I'm excited about the expertise that everyone here has. And I'm hoping that this is a panel that you all find very interesting. So very quickly, we're going to dive in. I should introduce myself. My name is Ifeoluwa. I am currently doing the MBA here at Oxford. And then I have some pretty solid people beside me. So welcome, everyone. So I'm just going to just introduce them by name, and then they're going to tell us about what they do, and then we'll kick off. Is that fine? Okay. So first off, I have Chuks Ibechukwu. Hi, Chuks.
Hi, everyone. My name is Chuks Ibechukwu. I'm a partner at the international law firm of Folarin and Tage, which is Nigerian-based, but we recently opened in London in December. And I joined to open that firm. Before joining before joining Folarin and Tage, I worked at an international finance corporation. I was there regionally for the private equity and funds business. I spent 7 years at IFC. I'm here today, not so much as a lawyer, but I'm looking forward to speaking to you about my sort of experiences as a founder, as well. Of our startup venture in London.
Okay, thanks, Chuks. Next, we have Macky O'Sullivan.
Great. Hi, everyone. My name is Macky O'Sullivan. I'm a partner at the international law firm King & Spalding. I'm actually based in the firm's Dubai office. I represent a host of clients on the investments into the African continent, particularly in the VC space. And what I hope to add to this session today is a bit of a snapshot of Middle East investment into Africa, because I think that's something that's quite interesting and is increasingly taking place at this point in time.
Thanks, Macky. Next, we have Folarin Aiyegbusin.
Thanks, Ife.
Yeah, it's on.
Is it on? Great. Okay, hi everyone. I'm Folarin Aiyegbusin, a Nigerian based in Lagos, Nigeria, and I'm the head of startup ecosystem for Africa at Google. That essentially means that I spearhead all our startup-oriented initiatives across the continent at the moment, including the Black Founders Fund, Google for Startups Black Founders Fund for Africa, which is a $4 million commitment to support 60 startups across the African continent with $50,000 to $100,000 worth of free cash, like $1,500K free cash, $200,000 worth of cloud credits, mentorship, and low-touch training. And the second thing being the Accelerate to Africa program, which is a mentorship and technical training accelerator program for seed-stage startups across the continent. Little more background. Prior to this, actually, all I've ever worked in is startup support. So prior to this, I worked for an African philanthropist called Tony Lumulu at the Tony Lumulu Foundation, where we supported over 1,000 entrepreneurs every year with mentorship, training, and a seed grant of $5,000. Happy to be here.
Folarin, that's a lot. But you said something about free cash. Is any cash really free cash? Guys, please have your questions noted when it's time. Okay, next I have Eugene in Nizeyimana.
Hi, my name is Eugene. I bring a different perspective. So I'm from Rwanda, and I'm the CEO for the African Business Chamber. We are based in UK. We work with the UK government, UK export finance, DIT, looking and driving investment trade between UK and Africa post-Brexit, of course, with other. Second, I lead an organization called One Africa Network. It's a network of 5,000 African entrepreneurs, leaders, innovators, where we are looking at various challenges affecting African in the global market and how we can better ourselves. Third, I'm a mentor for a program called Africa Women Entrepreneurship. Is a Bloomberg program based in New York. So each year we mentor around 200 women business across Africa to empower them in terms of growth. Before that, I used to be a mentor for Tony Romero a couple of years ago. And also I bring the market practical experience as an entrepreneur. So we have 2 startups in Nigeria, mainly in manufacturing. So we manufacture pharmaceutical products and cosmetics. So we are in the hair economy, beauty, and also in the food industry where we are we do bee farming. So we trade honey commodity. If you know what honey is, you can go to Selfridge and buy Manuka honey and see how much it costs. It's very expensive. So we're trying to add value to the African product. So part of my experience, I've worked across 20 countries in Africa within the oil and gas, manufacturing, automotive, banking, standard banking in Malawi, looking at unbanking, the unbanked, or whatever. So I'm happy to share my experience.
Thank you so much, Eugene. Last but not the least is our very own Tage, Kene-Okafor, who's online. He couldn't join us in person, but we're excited to have him. Welcome. Do you want to introduce yourself real quick?
Sure. Hey guys, glad to be here. Can you hear me?
Yes, loud and clear.
All right. So I'm Tage, Kene-Okafor. I'm a reporter for TechCrunch. So TechCrunch is a US-based tech publication. So I cover startups and venture capital for TechCrunch in Africa. So mostly Nigeria and the whole of Africa. So most of the funding news you see, right, from Angela Flotaway, I read them.
Yeah,
and before TechCrunch, before TechCrunch, I was at TechPoint Africa. So I've been doing this for about 3 years, right? So I'm also going to be learning from my fellow panelists since they've been in the game more than I have to. So yeah.
Calls it the game. Okay. The game is the game. All right. Thank you so much, Tage. Checking that everyone can still hear me. 1 second. Yeah. Okay. So let's jump right in. First question. This question is really based on the experience that you've had working with startups in the ecosystem. A lot of things have changed, right? And I think everyone in the room can agree. But I just wanted to know, very curious about what are some remarkable changes that you've witnessed, say, as far back as 5 years, right? Feel free to include the pandemic and all the good and bad things that it brought with it. But what are some of the changes you've seen in the African startup ecosystem, say, in the last 5 years? Chuks?
Okay, so 5 years ago, I was working for IFC, right? And if people have followed the trajectory of multilateral finance institutions, right? They were started, several decades ago as essentially debt houses, right? They were banks, financial institutions, and they did what banks and financial institutions do, which is lend. And for many years, IFC was really it was a lending institution. By the time I left IFC, they were doing, this is last year, they were doing like a lot more equity. And there's that realization that if you really wanted to, and I should say that I was based in Africa, my work was all sub-Saharan Africa. And there's this realization within, not just IFC, but within the development finance, community that if you want to realize real impact, you have to be willing to put more capital at risk. It's not enough to say, I'm going to lend to a company, because a lot of the companies, and of course now we're in the startup phase in Africa. And a lot of the companies do not have the debt capacity to take on debt. You don't have, when you're looking at, when you look at startups, when you look at a lot of the businesses that are starting, they don't have that asset base that they can provide as collateral for loans. And so if you're going to be a relevant development finance institution, you have to be able to provide risk capital. You have to be able to do more and more equity. And so what I found interesting in just the short time I was at IFC, I call 7 years short, but a lot of people work there for 30 years and more. But in that period that I was there is, that transition from, focus on debt to, doing more and more equity. And when I say equity is not just straight equity in businesses, but also looking to see whether, we can, provide, more structured products that meet clients' needs and that, businesses can use to, really, get off the ground. But still, when IFC did equity, it was direct equity in businesses that were, a bit more mature. They are, operating businesses that are generating revenue. You can sort of like map the, the returns that you can get, over time. You can sort of map the, growth. And so the equity that they did was either, direct equity into the businesses or, a lot of support for, private equity funds. And so that's sort of indirect equity. So essentially putting, money into, Africa-focused fund managers, leveraging their deal sourcing, leveraging their, portfolio management expertise in finding, the right targets in Africa and providing them with growth equity to grow. And so most of the focus, in terms of IFC's private equity business, was on growth equity and was on, operating businesses and portfolio companies that they can see, potential. And, now, I tend to see that, there's now this, focus on the venture space. It's not so much, it's not only, growth capital. You now need to, you now need to go back to the beginning. You have to be able to support, support ideas, support people in really in the early stage of businesses, because that is also where lots of employment, that is where, lots of the issues that really face Africa today are being tackled. And so now you see development finance institutions not just focusing on growth equity funds, and infrastructure and sector funds, but they're also now doing a lot more in the venture space. And so in terms of where I see like the industry going, where I see the venture space going, and I think there's going to be there's going to be continuous participation, because there's a lot of impact that can be realized by supporting startups. What you see is the startups that we are seeing in Africa are helping to solve some of the fundamental issues that we have in Africa. They're closing gaps in terms of financial inclusion. They're closing gaps in terms of access to health. They're closing gaps in terms of access to education. They're just literally providing access to everything. And so in terms of the impact, and by impact, of course, development impact, in terms of development impact that can be realized from supporting startups, I think that story is clear to development finance institutions. And so development finance institutions need to find a way to support the venture space. And so what that means for, for the entrepreneur, what that means for startups, what that means for funders and startups is that you maybe need to recognize that there is a role for development finance institutions. You need to try to understand, because DFIs are there, not just IFC, but others, that there's a case for them to support the venture space. There's a case for them to support, and by ventures, not just startups themselves, but also venture funds that fund these startups. And so the interests of DFIs, the interests of development finance institutions in supporting these businesses now need to be taken into account. You need to think about if I'm looking to attract capital to scale my business, development finance is likely to feature in that capital. How can I better position my business to attract what could potentially be a growth in development finance going forward? And so think about what development finance institutions, what they focus on, what they're interested in. Of course, the gender story is very strong. Thinking about governance, in your institutions. Of course, how can you strengthen environmental and social standards? And when you're looking to raise capital, when you're looking to bring in partners, it's important to realize that development finance will feature and how you structure a business as optimal as possible to be an attractive investment for development finance.
Wow, thanks for that, Chuks. I think, Tage, I want to come to you again from a research perspective, because I mean, we do read your articles, thank you very much. And if that's one thing we all recognize is how much research goes into all of those things that you put out, right? And you say you've been doing this for 3 years, you've worked with like 2 of the leading tech publications. From that research perspective and just trying to understand the Africa, tech ecosystem, how would you say things have evolved over time?
All right. So first of all, I'll say the growth of fintech, right? Because 5 years ago was 2016, 17. That was when Flutterwave, Paystack and the likes, that's when it started. And back then, I don't think, we had this robust fintech ecosystem that we do now, right? As of then, it was e-commerce platforms that were like the major major companies, coming to the fold in Africa in general. So Takealot, Jumia, Konga, and the likes. So they couldn't function properly because of the lack of logistical infrastructure and fintech also. So the advent of Paystack and Flutterwave and MFS, for instance, for mobile money, made these things easy. Okay, MFS has been in the game since 2009, but what I'm trying to say is like the growth of fintech. Okay, for instance, enabling people to businesses to accept payments, right? To make payments online and all that kind of created, this whole ecosystem that we have for fintech, and also to enable other fintechs to, provide solutions to other people and to other customers. So P2P payments, cross-border payments, even crypto. All these startups are riding on top of the infrastructure provided by the likes of Paystack and Flutterwave. So the growth of fintech in 5 years has been very, very fast because Paystack got exited to Stripe. Flutterwave, as you know, is $1 billion company. MFS is almost $1 billion company. Cheaper Cash is riding on this infrastructure to provide P2P payments. We know Kuda is in new banking, also fintech. So it's like fintech is like last year, for instance, fintech accounted for 60% of the venture capital investment that came into the country. So you see, because I think when venture capitalists see the growth of this space, they're inclined to invest more into it. So for me, that's always fascinating, right? The growth of fintech, enabling all the startups, right? EdTech and logistics to health tech to actually, come to the fold, and expand the whole ecosystem in Nigeria, not just Nigeria, but Africa,
Okay. My next question for you, Folarin, is, so we've seen how much, the Africa ecosystem, the startup ecosystem has grown. But this hasn't come without a cost, right? And challenges that a lot of these companies face today. So yesterday we had a founders panel, with some of, what we consider to be successful African businesses, Trigger Foods, Piggyverse, Lamy, but again, they still had to touch on, some of the challenges that they're facing. So I think my question to you is, what challenges would you say that you've seen startups struggle with? And then from the side of Google, how do you think the company is helping to, support and address some of these challenges?
All right, thanks, Afia. What I've done over the past couple of years is buckets the challenges that startups have to form. Capital, so additional capital, access to market, favorable policy, and hiring and talent. So then I take each of them. So for the capital in the first place, we started many years ago. We saw the tech ecosystem grow with the likes of CC Hub in 2012. And since then, we've seen an influx of capital, right? But before that, we saw 3 things: friends, family, and fools. Either at an individual level, people set up businesses and remain as one-man businesses, or you see friends, family, and fools support these different businesses, right? Over the years, we've seen some investments come into Africa. Last year, we saw was 4.7, almost near 5 billion investments into the continent. But that's not even a drop in the ocean, right? I was at an event just 2 days ago, and we saw that the UK received 40 billion in VC funding over last year. that was last year, America's a couple hundred billion, right? Size-wise, we are 1.3 billion people, right? We are not a monolith. We have hundreds of thousands of startups across the continent. The capital coming in isn't doing enough, if anything. We have people building as well, solving serious, real challenges that Africans have. And again, with limited capital, these startups are very likely to not even take off. They're very likely to die. That's the first one. Second one is additional markets, access to markets. On the market side of things, there was a discussion earlier about 200 million in Nigeria, 200 million population in Nigeria, 180, 200 million population in Nigeria. The thing about the markets is that while you look at those macro figures, it's important to understand the socioeconomic landscape as well. It's important to understand the disposable income that the markets have. It's important to understand the access to connectivity, internet connectivity, access to smartphones that they have. When you narrow down based on these different metrics, you see that there's little to no markets at the moment, consumer markets at the moment, right? So with the likes of the AFCT agreement, hopefully that actually does something and allows for cross-border collaboration, cross-border trade. With that, hopefully there's new markets for startups. But at the moment, that's a big challenge that startups have. Again, that's why if you look at the startups that are thriving, as Tage was talking to, so that's the Chipper or the Flutter, they're B2B service providers. Sure, there's a B2C element to some of them, but if you look at where the money is coming from, it's the B2B element. So it's businesses servicing businesses. But on the consumer side, it's very difficult to actually figure out a business model that is profitable. The third part of things is the favorable policy. That doesn't necessarily just cover the regulators or policymakers, that also covers infrastructure, right? Because it's one thing for you to say you're building tech startups. There's another thing, who is going to use the tech startups if there's inadequate connectivity, right? Also on that part, I'll give an example, right? I think in 3 years ago, we saw overnight in Lagos State, Nigeria, we saw the government essentially shut down an entire value chain, right? We saw that was Max.ng, GoCard and the rest. Overnight, they had to pivot, right? I don't want to say shut down. They had to pivot into other services just because of one policy change, right? You sit with founders and listen to how the likes of Flutterwave say, and the rest say they're going to Abuja to meet with the policymakers. They have groups, they have many WhatsApp groups. They're engaging policymakers, whether it's one bill or the other. But at the same time, overnight, there's a new bill that's passed, right? And they're all blindsided. Yes, the governments are trying their best, and there's the discussion around ease of doing business, but policy is still so volatile that the startups are on their toes, and they have to figure out whether they have to be so broad that if one policy comes, am I able to, still generate some revenue, still survive amidst that change? And the last part would be the hiring and talent. What I say is that no one really comes forward and says they're a startup developer, startup junior developer, or startup senior dev. You just say, I'm a junior developer, I'm a senior developer, for example, right? The market, the talent market is open to everybody, any and everybody. We have the likes of Google or the Facebooks and the Metas and the rest hiring the same people, right? What that causes, what that leads to is an increase in the cost of talent, right? So it means, the talent is now not competitive, or startups are no longer competitive for receiving the best of talent to support them on their growth journeys. So with that, I think what I then do is lead into what we are doing as Google. Again, I think I mentioned the Accelerate Africa program that we have and the Black Founders Fund, but that is merely, again, a drop in the ocean. On the startup side of things, we support these early stage, seed stage startups, tech startups with funding, mentoring, training. What we say is exposure to our investor network as well, exposure to press. And I think the simplest of things, the software side of things, is slapping the Google name on your startup, supported by, right, accelerated by, just slapping that, and that's sort of proof of concept that helps these startups go a long way. We do that through our startup-oriented programs. But in addition to this, we have the likes of the Google Africa Developer Scholarships, right, that is supposed to train 30,000 developers across the continent. We did research last year, 2 years ago, and we mapped out and found out that it's about 800,000, almost 800,000 developers across the continent. The thing about that is when you narrow down, look into the detail of that, there's question of the availability of jobs or the growth opportunity for them and many other things. At least we're starting off with the training. The next step is for others. We can't do everything. The next step is for others in the same tech landscape, tech ecosystem to pick them up, run them through their own programs, run internship programs, hire them, right? Put them on projects, right? Help them scale, help them develop. And with that, that is solving the pipeline issue for the startups. We also have, last year, we made $1 billion commitment. Sundar made a commitment directly to Africa for infrastructural development, to hire more engineers, more product developers, product engineers in the region. We've seen that through the Equiano, we've seen that commitment actualized through, for example, the Equiano cable landing in Togo and Nigeria. In Togo, it's set to create about 37,000 jobs by 2025. And in Nigeria, it's set to create 1.3 million jobs and contribute $10 billion in GDP by 2025 as well. Again, this is not the best we can do. This is what we're doing at the moment, but there's so much more that needs to be done by the others in the tech ecosystem. What we say is that a rising tide lifts all boats. And I also don't, there's two things I say, right? A rising, and I stole it from someone actually. A rising tide lifts all boats, and there's no such thing as benevolence in funding, right? In support, startup support. I was saying that earlier in the conversation. On the first part, if more startups succeed, so people ask why we do this, right? If more startups succeed, it's almost inevitable that they would go on and use our products, right? That's pretty much the same bet that a lot of these other tech companies are making as well. Help the ecosystem scale, train developers, help them grow. With that, essentially, you'd create, prosperity, socioeconomic prosperity, if anything. And on the other part of things is there's no benevolence, is that bringing the funding. Someone asked, I think Alexandra asked a question earlier about what is that differentiation that Africa has. What we have is the average age of the entire continent is, I think, 18 years old. We have that. We have a plethora of challenges and problems. What that essentially means is that for every startup you're creating, there's a possibility to create an entire value chain around that startup, right? You create a health tech startup, you're creating a fintech startup as well, you're creating a last mile delivery service as well, you're creating many things, right? With that, thanks to the many problems that we have, right? Additionally, because of the age of the average of the population, there's a potential longer product cycle, product life for most startups anyway, right? Due from birth to death for most startups. So it's things like this that I've seen in the markets, but I also think every time I say people ask about the challenges, I say, again, what I'm seeing is opportunity for everyone to do more, essentially. Just build.
Okay. So to you, Macky, and this is a question that I literally just on the fly, but I'm just curious, why do you think what you're doing with investments from the Middle East is important to the African ecosystem?
Okay. I think what we've seen is a particular shift. Historically, capital from the Middle East into Africa has been concentrated in North Africa. So in the Middle East, it's very normal for them to invest in a company in Egypt or Morocco, Tunisia, Algeria. But there's been a shift because all of a sudden, these investors are realizing, hold on a second, there's a lot of activity in Nigeria, there's a lot of activity in Kenya, and we want to have exposure to those jurisdictions. It's really important because as we have an increasing pool of investors, the wider the investor base, the more capital that's going to flow, and it's going to be for the benefit of the ecosystem, right? I think there's another point to it, which frankly, I find the most interesting, which is this shift in the mindset of startups and founders in the African continent to have a global outlook. So thinking of their business not just as a Nigerian business, but thinking of it as a Pan-African business or actually truly a global business. And there are two examples which have a Middle Eastern element that I want to touch on. The first is Helium Health, right? Great health tech firm, they're doing amazing things. They acquired Medi, which is a doctor booking app based in Qatar. So you have a Nigerian company acquiring a Qatari company. And then you have the second example, which is Swivel, right? Swivel, Egyptian company headquartered in the UAE, acquiring a Turkish, mass transport systems company, Volt in Turkey. So, those two examples are showing us that, one, the Middle East is an area where the capital flows, not just to North Africa anymore, but also to the rest of Africa. And also there are also opportunities, not just in terms of, we're going to get capital from these regions, but there are synergies and you can actually expand your business not just within Africa, but also in the Middle East. And there are people who are doing it. So hopefully that's a positive sign and indication to others, and we'll see a lot more of those.
Okay, great stuff. Eugene, I mean, you did touch on the fact that you do quite a lot of business in Nigeria, and then in other parts of Africa as well. So from that perspective, what are some of the heavier challenges that you've had to navigate, and how are you doing that?
So the changes in the last 5 years. So the last 5 years, we've seen a lot of disruption that we've never seen before. So we've seen Brexit come, UK exiting EU, which means UK now is refocusing its interest in Africa to invest in. I'll talk a bit some of the investment we're working on. Second, we've had COVID, which has changed a lot the way we live, remote economy, digitization and everything. Third, now we go Ukraine, Russian war that is also calling to question the global trade arrangement. In terms of the changes, of course, one, the dynamic in Africa are changing. One, there's a realization that Africa needs to trade inwards. So AfCFTA came in now to support Africa trading with itself. Hopefully, Rwanda trading in Tanzania, Rwanda trading with Uganda, Kenya in the region. We're seeing Nigeria with Ghana and all those. This is one. So trading locally is important because Africa is a big market, 1.5 billion. So the shift is not African SMEs looking outwards globally rather than inwards to satisfy untapped market. Secondly, we're seeing, of course, digital economy has boomed. So beyond FinTech, there's a lot of tech startup from into what we call sustainable sectors of economy. This is healthcare, food industry. So Twiga, I know Twiga quite well because we've been working with them with the AGRA, Africa Green Revolution Alliance, looking at their supply chain within East Africa in terms of logistics from upstream, downstream, midstream, all the way in terms of, and then we're looking also various interests in terms of renewable energy. Business to survive, you need energy. Energy has been a challenge in Nigeria. Recently, we've seen a huge shortage of energy, business shutting up. You can't run an economy without power. All this FinTech we are talking about, without power, everything is shut. So we're seeing a lot of investment into clean, sustainable energy, solar, off-grid, isolated more power, a lot of investment to the sector. We're also seeing a lot of investment in smart mobility. We're looking at, everyone knows congestion in Lagos. How do you manage that? The time, something with Africa we never think about, the time we waste in traffic is huge. COVID has called into question, you don't need to be traveling. You can now, Africa appreciating working remotely. You work smarter, more efficient. So there's a lot of investment opportunities opening up into e-mobility, smart mobility, affordable housing. 200 million in Nigeria is a huge opportunities for investors into affordable housing, away from high-end housing we see in Eco Island or Abuja. So we're seeing a lot of interest in those areas. Food, everyone needs to eat. It's a market that can never finish. You have to eat. So we're seeing a lot of investment into food manufacturing and all those. Another one is manufacturing. We're seeing a lot of investment into automotive. So recently we've been working, I'm part of McKinsey Automotive Institute. We are working on a project with the UK government. It's a 5 billion project with the UK government, BCG, looking at how we support African automotive sector. So for example, Rwanda recently set up the VW plant. Kenya is coming up. We've seen Egypt, Morocco, away from the traditional South Africa. South Africa is a big market in terms of automotive, 20 to 25 OEMs and all those. So quite a lot of things has changed in the last 5 years. Of course, the global economic disruption, COVID and all those has called into question in terms of the existing supply chain. And a lot of global companies have shifting their supply chain from China, India to Africa. Good example, one of the SME we worked with, I don't know if you know, Blue Sky in Ghana. UKF put 200 million, and now Blue Sky supply all the horticultural product you see in Mark Spencer. So we work with them to build their packaging, everything that is packaged Mark Spencer to the UK. So what we're doing, we are helping African SME startups, small businesses to enhance the quality of their product for the global market. Second, we are opening up market opportunity, not just in Africa, but in the global. And third, also helping them to increase capacity. And another one I just wanted to touch on, of course, there's a improvement in the business climate. And unfortunately, I feel like we've talked about the big four, Nigeria, South Africa, Kenya, and Egypt, but there's emerging new players in the system. Of course, Ghana is there, Senegal, Rwanda, we are doing well, and we also attracting a lot of attention in good governance, good infrastructure, ease of doing business. I know IFC do recognize some of the amazing work that some of those countries. Tanzania is another one that we haven't talked about. These countries are opening up new opportunities, and we encourage a lot of entrepreneurs to look at those ones away from the big four. So I'll stop it there, but I'm happy to expand more.
Thank you, Eugene. Okay, so my question for you, Chuks, is just piggybacking off something that Macky had said. So how companies start in one location and then decide that, you know what, the plan has to be much bigger than this, right? I'm asking you this because, I mean, you know, Olaniwan Ajayi itself, it's a Nigerian law firm. But then I should say that they are doing something that no other law firm has done from Nigeria. You know, they decided to open a London office, right? Again, when you hear this, you're like, yeah, it's not a big deal, but I can tell you it is a big deal. You know, being a lawyer myself and, you know, understanding what it is for law firms like this to decide to, you know, move into other markets, particularly a big one like London, right? But, you know, I remember we were having a chat before this panel started, and you were saying your clients are different now. You know, so I don't know if you guys can see the shoes that Chuks is wearing, but he's on sneakers. You know, he's like, yeah, I'm not wearing lace-up shoes. You know, because he said, yeah, his clients are different. You know, he said to me, they used to be investment bankers, but now they're like guys in t-shirts and hoodies, and you know, I have to at least connect with them, right? You know, so I just wanted to find out. You know, I mean, you're essentially building a startup here in London, right? Albeit a law firm. What are some things that you found very interesting and maybe shocking, you know, about the process so far?
Thanks for that. You know, so, I mean, I think it's a big deal.
Yeah.
Right. And maybe I'll start by, you know, explaining why I think, you know, this is a big deal. So, I mean, when we look at, say, for example, you know, infrastructure in Africa, and this is not just, you know, your, you know, traditional forms of infrastructure, but, you know, as one of our, like Eugene has just mentioned, you know, with you know, digitization of our economies, you know, our digital infrastructure that's being laid as well. When we look at, you know, how we deliver infrastructure in Africa, and we think about, you know, all the components and the, you know, the technology and the, you know, the expertise and the, you know, the capital that we bring together to deliver these projects. You know, one thing that's immediately, you know, clear is that it's, you know, a lot of these components are North African, right? You know, a lot of it is imported, right? And you know, you can take, any infrastructure, whether that's power, mining, extractives, transport, whether our ports are our roads. When you look at, that major, turnkey contract, that contract is usually giving over to, an engineering firm or, a consortium that's, in the US or Asia or, or Europe. When you think about, the project management, for these, sophisticated projects, that's usually given over to, a contractor that's, had experience in delivering these types of projects in other parts of the, in other parts of the world as well. And invariably, they're not usually African, contractors. We all hear about the infrastructure funding gap, in Africa. We all hear about the hundreds of billions of dollars that we need to bridge the digital divide. And so we need to pull in all this capital. And a lot of the financial institutions that have the balance sheet, to provide this type of capital, they're IFC and, DFIs and multilaterals and other international financial institutions that many of which are not, are not African. And of course, there are people like me, the experts and the expertise. So there are armies of consultants, whether that's technical, insurance advisors, environmental, social advisors, marketing consultants. We have to pull in, like an entire army of consultants to deliver these projects. And what I found, through my career is, when you sit around a table for the delivery of an African project, or I shouldn't say table anymore, we're now on Teams, right? So when you get on a Teams call, for the delivery, for the delivery of an African project, a lot of the people, a lot of the organizations that are represented there are typically not, not African. And so the question always arises now that when we decide that we want to attract investment to finance projects in Africa, right? And so, take your power project, you want to deliver a 100 megawatt, project in, any, country in Africa, you have to bring in like $100 million of, debt, equity to finance this project. Yes, we have the capability to attract $100 million debt and equity. But that $100 million then goes to what? It goes to pay, your US, Asian, European, contractor, or your US, Asian, European, project manager. The funds, coming in at some point, it will have to, you have to return that capital to, to where it's coming from. When it comes in, it has to go back to IFC, it has to go back out at some point. And when you think about the experts, we have to pay, lots of, we have to pay these, essentially development dollars, across, to experts, from all over the world. And so, yes, we have mobilized like $100 million to, finance a 100 megawatt project in, in Africa, or a project that's situated in Africa. But, that does not always, in my experience, that does not always translate into $100 million investment into Africa, right? It's $100 million of investment somewhere. We have a project, but it's somewhere, but it's not $100 million into Africa. And so maybe let's think about this now in real terms, and I'm just going to use my industry, legal services. So of course, 7 years at IFC, IFC, private sector, the private sector finance arm, the World Bank Group, one of the largest and most influential emerging markets investors, including, in African projects. And, I've worked there for 7 years. And in that capacity, I was a buyer of legal services, so I went out to external law firms to, bring them onto and advise on our projects. And, between 2015 and 2020, I worked on 10 projects in Nigeria. So I advised on 10 projects in Nigeria. And I paid over to law firms advising on those projects $2.25 million. And so that is, when you look at, that's both international firms and local firms, right? So the international law firm that's advising on the, and for those that are not lawyers in the, in the room, for most inward investment going into Africa, the international investors usually choose either English or New York law, in some places French, to govern the terms of their primary investment agreements, right? And so English law is essentially established. It's an established, concept within it's an established choice of law, in international financings in Africa. And so for IFC, most of our deals, where projects in Africa are involved, the terms of our financings are governed by English law, right? And so for IFC and for many other investors, many other international investors looking at investing in Africa, if you're going out for legal services, you need to think about, two sets of law firms. One, an international firm that will advise you on the English law aspects, and a local firm that will advise you on the local law aspects as well, right? And so I spent 2.25 million on my 10 deals in Nigeria, international law firms and local firms. And of that 2.25 billion, I paid 175,000 to local firms, right? The balance 2 million, I paid to international law firms. And the reason being is that the investors, the bulk of the deal, right? The bulk of the deal in terms of the structuring and the deal management, the transaction management, the coordination, right? The bulk of that competence, right, is carried out by law firms in the UK and US who over years have built up like a deal sheet that can deliver that, right? And so the 10 deals, 2.25 million, that split, Nigerian law firms getting less than 10% of the money that IFC paid out, on that. But when you think about that, it's not just $2 million, right? That's lost to UK and US law firms. You also need to think about the development story, right? Or the development aspect of that. It's $2 million of expertise, right? That's foregone by Nigerian law firms in terms of like the capability to transaction manage and deliver projects in Africa. It's $2 million of funds that should otherwise, if we could deliver that component, it's $2 million of funds that should otherwise have gone into Nigeria, that should have been taxed in Nigeria, and that should have trickled down the Nigerian economy. It's $2 million of development financing that should have gone into the continent and used, within the continent. And if you're not competing for that aspect of the deal, right? If you don't have that experience, it just makes you less competitive, in comparison to your peers. And so that was 10 deals in Africa. I worked in on over 50 deals. I closed over 50 deals while I was at IFC in those 7 years. And also looking at, when you think about the market for legal services in Africa, we sized it when we were thinking about launching in London, and the consultants came back. I thought it was a conservative figure, but they came back with the legal services market, foreign investment, Africa as a whole, about $452 million, sorry. And if you take that same sort of 90-10 split, you can then start to understand the numbers that Africa as a region loses, if law firms in Africa aren't able to deliver on the transaction management and carry like the bulk of the deal. So what we have done, if you ask me what we've done, it's not about like setting up like in London, right? I think what we're doing is trying to be relevant to the African, we're trying to be relevant to the African context. Right. And when I think about like what the African context is it's African businesses who know for a fact, right, that they will be reliant on international capital to deliver on African projects, right? And therefore they know for a fact that they need English law services. So being relevant to the African context means that an African business should be able to say to its investors or say to its clients when they come to it, look, I'm attracting international investment. My international clients are coming with English law. We have to be able to say, yeah, let's do it for you, right? We cannot say, no, you have to go buy it in London. Right? We cannot send them somewhere else to do it. We have to be able to say, you're relevant to the African context and we can do the deal for you. Being relevant to the African context to me means, as I was saying this to you, right? One of the biggest, with the past couple of years, of course, there's been a huge sort of boom in M&A. One of the biggest issues for African firms, especially in Nigeria, South Africa, is like loss of talent, right? I mean, there's a lot of lawyers in Nigerian firms, a lot of lawyers in South African firms, Kenyan firms being poached by city firms. I mean, we can't compete for this. But it does not make sense. It does not make sense to me. It does not make sense to Olaniyan Ajayi as a firm that if you're an African lawyer and you want to get transaction management expertise, for a project in Nigeria, the only way you can do that is by going to London, right? Or if you're an African lawyer, if you're a Ghanaian lawyer, or a lawyer in Tanzania, and you want to get deal management expertise, or you want to understand how to deliver, how to advise on African projects, it just makes no sense to me that in order to do that, you need to go to London to get that expertise. We have to be able to deliver it in Africa, right? And so for the deals that I have closed, I closed my first deal last week. It is the first deal that an associate in Nigeria advised the US company funding projects in Tanzania. I have associates in Nigeria that are advising on Tanzanian deals and getting Tanzanian expertise, on their deal sheet. I've got a project where 100% of the legal fees, not 10% this time, has come to a Nigerian firm. And that is the direction we need to be. We need to be relevant to the African context. And so that's the story. In terms of the challenges, lawyers have no place doing business or being entrepreneurial. So, just the operational aspects have been hell. But I think the biggest challenge in terms of what we're doing is really, and my panelists have mentioned this, is really mindset, right? It's really mindset and trying to convince people, that a Nigerian firm can advise you on English law. It's
Thanks,
how that goes.
So we're going to open up for questions and answers, but just real quick, I just wanted to get quick thoughts in 1 minute, very quickly from panelists. I think Chuks has touched upon this, but I wanted to just get your views on prospects. Where's all this going? 1 minute. Where do you think all of this is going? Where are we headed in another 3 to 5 years? 1 minute.
I think the future is in Africa, and Africa is rising. Opportunities, even in the West, everyone is looking to Africa. Huge market, huge potential, raw materials. So Africa is booming, many opportunities beyond FinTech, creative industry, we didn't talk about it, music industry, Burna Boy, you see him in the West winning, and the fashion industry. If you go to London, all the high-end fashion, Gucci, all of them, they are now adopting African fabric. If you look at the other sectors, in addition to that, there's a lot of African FinTech migrating to the UK. We recently facilitated 5 of them in Manchester to access global capital. So Africa is a huge market. Everyone should look at it. The future is in Africa. So, and also I would urge, look at the sectors beyond FinTech, healthcare, agri, food, renewable, transport, mobility, and all those sectors.
That's a lot of sectors, by the way. We're looking beyond that.
Yeah.
But Tage, real quick, where's all this going? Prospect.
So we should expect more, venture capital from international funds, despite what's happening right now with the slowdown and VC funds wanting startups to be frugal and what, in how they do their business. But what I think is, more funding will come into the ecosystem. So I think, sorry, I've forgotten the man's name from IFC. Sorry.
Yeah.
Sure.
So he mentioned the participation of DFIs, right? So the IFC, the CDC, right, from the UK, and the increased participation in investing in startups directly, right, and also in venture funds, and I think that will also increase local capital, right, from in that regard, because if we just have only international capital without local capital at some point, it's not just make any sense. So we need more local capital, and the participation of DFIs investing in local funds in continents will also help. So and also the participation of investing in other countries apart from the big four. I think that's something that actually happen in the next couple of years. So apart from Nigeria, Kenya, South Africa, Egypt. So like Tunisia, for instance, is picking up steam, Senegal, Ghana. So if the continent wants to look big in the eyes of investors, like international investors, those countries are also critical to the overall growth and GDP of the continent, not just individual places, as we see in Nigeria and the other big three big investment destinations. So I think those are the three things that I'm looking forward to.
Okay. Macky, 1 minute.
Yeah, so just very quickly, I think there's going to be a broadening of the investor base. So we're going to see a lot more family offices and non-traditional sort of VC funds investing in venture capital. And we're starting to see that now. I think the other thing as well is M&A. There's going to be a lot of acquisition that goes on as African companies start to sort of scale and broaden their horizons and think beyond, their specific countries and even beyond the continent. So.
Okay. Fine.
I feel like the pessimist on the panel now.
Well, you don't think it's going anywhere?
No, not that. Well, so I think there'll be a lot of failures, which is actually a good thing as well. But there's going to be a lot of learnings from those failures. So the ecosystem or landscape as we know it will not be the same in 5-10 years. We see a lot of these founders that have set up these thriving companies now, startups now, pivoting to step aside and move into other startups. And with that learning, with the networks that they've built, they build more amazing startups. I'm not going to name names, but I don't imagine a lot of them being with the same startups in a decade. Right? So I think about it as the PayPal Mafia, for example. Right? They're going to step away from these top startups and build amazing things and solve more problems. Also, what I'm very excited about is founders investing in founders. You see that through whether that's Future Africa and the rest, right? First Check with Odun. That shows the sort of maturity of potential maturity of the market, right? With that, with the more we see of that, right, and it shows the maturity. So I'm going to continue following that to assess, I guess, the market.
Yeah, okay. A round of applause for my panelists, first of all. Yeah, that was a lot of info. Thank you so much. Yes, we have a couple of minutes now to take questions and answers. Okay.
Sorry, I just want to very selfishly go first and ask a question to Tage. For those who don't know, Tage was my classmate a few years ago. I'm happy to see the amazing growth. Yeah, bro.
Which is why you shouldn't be asking this.
Yeah, so I think, Tage, my question is so when I read a lot of articles from TechCrunch and stuff, it's always about very big raises, it's always big news, right? So are we gonna see, or do we have prospects and seeing just normal reporting about people who are really working hard, who maybe have not done any of these raises, as a way of encouraging other people to look into beautiful ideas? So that's one. And the second bit is you said something about how Jumia and Flutterwave and all of that were able to kind of enable each other. So with now this kind of level of integration and basically what you have seen, where would you think the next value will come from?
All right. So for the first question, I get that question a lot. So the role of TechCrunch for in the global startup scene, if anyone has noticed, is so they report funding rounds for early stage or sometimes late stage investments. It's majorly a financial publication, right? So it's not a social impact publication or how do I put it? So what I'm trying to say is, so I mean, that's what they've been known for, right? It's reporting about investments, venture capital, and startups, right? Occasionally, they go, beneath the surface to report on guys that are actually working, like what Godwin asked. Guys are working hard to make changes in different sectors around the world, but they don't have the funding to do that. They do that occasionally, but that's not the main, that's not their main bit. That's not the main focus of TC, right? So once in a while, it's something that can appear on the site. So I have a colleague in Kenya, Annie. So the thing is, we just report a lot of funding rounds because that's, there are a lot of them, to be very honest, right? It's like, if you wake up, founders are reaching out to you, or you get a scoop that, okay, someone is raising money, and then you don't have enough time to actually, look into what others are building, because I'm not a machine. Annie isn't either. So, yeah, we do want to report, stories that matter, like what Godwin said. Those stories, I think local media, for instance, TechPoint, can actually, they do, reporting like that very well. And I think there is an opportunity for them to go deeper into that. If it's something TC will do, I don't know for sure, because, generally, like I said, they're more of a financial publication than maybe social impact one. Then for the second bit about, so yeah, like I mentioned earlier, 2015 or 2012 to 2016 was when, e-commerce boomed. And after that, we're seeing like the rise of fintech, the dominance of fintech. And the integration, looking forward, I still think fintech still has a couple of years to be the main sector on the continent, because then it powers, like I said, other sectors like, education, for instance. You can pay school fees online faster, logistics too. You can, instead of pay on delivery, you can also pay on, e-commerce channels and whatnot. So as per sectors that will emerge from fintech, maybe crypto, for instance, right? There are businesses coming on the continent where you can enable, merchants, crypto payments, for instance. They are kind of riding on infrastructure set by Flutterwave and, Paystack and all that. Then Web3. I don't know so much about Web3, but there's a lot of enthusiasm about it on the continent too. And we should look forward to seeing how, those markets or those segments, come out of, how well fintech has done so far.
Okay, more questions from the audience. Yeah, I think he had his hand up first. Yeah, and then we can go around.
Thank you very much. My name is Christopher Mpanga. I'm an academic lawyer currently working with the Gloucestershire County Council. I'm looking for a training contract to become fully qualified. But I found, the fact that, if I moved from Nigeria to London, very intriguing. And I have two questions for Chuks. One is you talked about the challenge of mindset. How are you dealing with that to change that, so that you can get more, Nigerians advising on English law, say for African projects? That's one. Then secondly, how are you positioning yourselves as the African go-to firm, say in a global market, for example, here in London? Thank you very much.
Thank you very much. Mindset is going to be difficult, and this I don't think it's Olaniwu and Ajayi specific, right? As a region, intra-regional trade in Africa is the lowest of all regions. When you look at, say, for example, Europe and Asia, intra-regional trade in Europe, Asia are, between 45 to 60%. Europeans buy European, Asians buy Asian, and then the rest is, the rest of the continent. And when it comes to Africa, intra-regional trade, we spoke about Africa, their numbers, intra-regional trade for Africa is 13%, right? And that is trading goods. When you're looking at trade in services, that's even less. And so I think it's not just in terms of, quality, whether there's a perception or mindset that suggests that African products or African services are, lesser quality. I think we need to do that, but we also need to make sure that we demonstrate that, you can get the same quality. You can get the same quality with an African firm than you do, with, firms anywhere in the world. So the message that I have to clients, right, is, firstly, trying to flag that, one of the biggest risks, one of the biggest challenges, of course, and I said that earlier, that African firms are experiencing is, loss of talent. There are African lawyers in Africa who have spent their entire careers in Africa who are being poached by law firms in Canada, in the US, in the UK, in Australia. And so in terms of quality, we are, as a continent, strong, shopping area. So the talent is there, right? And, secondly, we need to make sure that we hire, right. And so as a firm, we already have talent that is being required by international law firms. And so hopefully, they take that as an indicator, but also in terms of the way we recruit. And I think this is for any business, any business starting up, any startup whatsoever, it's always going to be about the team. You have to be able to deliver a team that can, that can do that. But, I have found, I got this from somewhere else. I told them, my background is Latham A&O, Latham A&O, Cadwallader, don't go for me. Sorry, go for me. Don't go for this other firm. I said, Chuks, it's not the same, and, so you still have to do that. You still have to do that, that bit of work, and just how we try to position ourselves. It's not going to be today. We have no, and, whether you, talk to, the Flutter Waves or the Jamias, none of them did it in a day. Everybody has a journey. My wife keeps on reminding me that, look, it's only been 6 months. It's not going to happen in 6 months. It's a process. And, for any startup, including ourselves, that we just need to believe, right? We need to believe, because no one's going to, believe for us. We need to believe that we can do this. We need to stay resilient. We need to keep pushing. And, at some point, we will, change that, perception that, Nigerian firms can deliver, in just, the same manner and at the same, quality, but we need to do the right things to do that. That's all I can say.
Can I just add on something? In addition to that, of course, Nigerian banks have done it. If you go to London, there's a lot, financial have done it. So other sectors have done it. One thing to add on that also, African, we need to invest in ourselves in building our reputation. And one of the things I just want to give, Rwanda has invested a lot in what we call country branding. Yeah. Anywhere you go in the world now, the country has invested a lot anywhere in terms of the reputation. The president will be happy to export experts from Harvard to go and do the medical in Rwanda than exporting them. So we need to believe in ourselves and our reputation. All of us, we are graduating Oxford, Harvard. We are studying the same people who are doing the same job in London or Oxford, Cambridge. So there's nothing, we have the capacity, we have the capability. It's just the reputation and the confidence to say whatever these guys are doing, we can do the same. And we can do it. And we can sell Africa for Africa, or Africa for the world.
Of course. Okay. What questions?
I just had a really quick question about mitigating risk. And I think maybe Macky might help us. But we got to
Yeah.
No, so I'm
just
kidding. What are the, even like companies as big as successful as Flutterwave come with their own risk. And I'm just wondering what some of the mechanisms are, I don't know, contractual, I don't know, monitoring, what sort of risk mitigation mechanisms to protect yourself, protect your clients,
Yeah, I think you've hit the nail on the head, right?
What sort of terms, are they onerous, are they, how do you balance?
Look, I think you've hit the nail on the head. You know, lawyers are by nature quite pragmatic, and they're always looking for risk and how to mitigate that risk, right? So, yeah, I think one thing that you have to think about, though, is this is venture capital. Venture capital in itself is risky, right? One of the things that we've seen, which is actually not great, is when people come in with this mindset. So I give an example: people who have traditionally done private equity deals or deals in, you know, which are non-VC, and they come in with that mindset into VC. You know, you cannot be risk averse and go into VC investments, right? A lot of these startups are going to fail, and that is just the nature of the game. As lawyers, what we try and do is identify where some of those failures can crop up and nip it in the bud early. And it's not a case of taking sides to say, okay, we're going to protect our client. It's more of a conducive working together relationship. So when I'm representing a global ventures, for example, Basil, and we're looking at a startup that he's looking to invest into, we are working with the founder to say, hey, for example, this is your current group structure or your company structure. This is how we need to amend it, whether it's setting up a holding company in the Netherlands, if we're dealing with an Egyptian startup, for example, looking at tax risks and saying, look, these are the ways in which you can improve your structure so that it works well, not just in terms of mitigating risk for the investor, but also helping the company to thrive. So I think I just wanted to add that to it.
Folarin, do you have anything to add to that?
I think it's exactly that. So for us, the startups we support don't necessarily assess risk. Risk, as we know, it's for the startup support, especially because we don't do investing. Right? It's free money. I just like to say free money. Just put in the free money, right? There's other metrics we do assess, by the way, to help us ensure that the startup program fit. But in terms of risk, not necessarily. But what I can say is, I guess this is also coming from the news that has that's come out recently about some startups that have been mentioned in the panel today. We try to, so there's two things that we do. We mentor our startups. So we connect these earlier stage startups with more seasoned startups. What you see is that in the season, every new startup comes as one or two people. You're either an engineer that has, usually it's very surprising when the engineers come with ideas, have an idea, build a product, and you try to build better products, and then figure out the business later. Or you're a business person, problem solver, business person, and then you find an engineer to help you to work with you. Most times, nobody thinks of the corporate governance side of things. Nobody thinks about the documentation and the other aspects of business, right? So what we do through our programs is connect them to those that are seasoned enough to understand the importance of these and to mentor them, and also do things like corporate governance training for these startups. A lot of it is that, again, and I found this out recently, is that, so I think it was Paystack. It was only during the acquisition, right, that a lot of the back-end stuff was done. Before that, they were a nice company to look at. They had raised X amounts, they were doing really well. It was only when it was time for the real money that they scrambled and had to put their books together. That's a lot of things with startups, right? You're gonna see more stories like this. But my thing there is also that this is not peculiar to the Nigeria, the African startup ecosystem. We see this in Silicon, we see in SF, we see it everywhere, right? It is important, it's just as important as it is there, as it is in Africa, to improve on the culture around corporate governance and mentorship, peer-to-peer mentorship between startups, the earlier ones and the more seasoned ones.
Okay, I think we have time for one more question. Yes, okay.
Thank you so much. My question is for Chuks. I think you spoke about how DFIs have moved from providing growth equity to providing venture capital. And I was just curious because Folarin told us about Google providing free money. And I was just curious about the considerations that DFIs have in other than impact, right? What are the considerations they have in providing capital to businesses in Africa? Do they also have the same considerations that VCs have in terms of providing equity capital and then having to exit for multiples in a couple of years? Or do DFIs have other considerations apart from just the impact? Do they also want to make more money. Sort of, how do you differentiate DFI's considerations from VCs? Thank you.
That's a great question, and the process for DFIs is you really need to tick two boxes, right? On any of the deals that go to IC, you must tick the financial sustainability box. If IFC and other DFIs, they have to be run like financial institutions. Their balance sheet or their lending balance sheet is not just from shareholder equity. They have to make money to lend money. And so first of all, they need to prioritize the financial sustainability of an investment. And once you tick the financial sustainability box, i.e. looking at this investment, analyzing the risk, understanding, that of course the risk return, does it make sense for us to do this from a financial standpoint? Yes. And then the second thing they need to think about is, does it make, because they're development finance institutions and because they have development mandates, they must of course satisfy their development, impact story. And so for anybody just looking for anyone looking at, DFI money, yes, IFC money is not going to come free. No DFI is going to provide money for free. No one can compete with free money, coming from Google. But the reasons that people approach DFIs, the reason that you would say approach a DFI with higher cost of capital, as opposed to another financial institution that can probably structure the product in a much better way, that can give you better terms, that can execute it quicker. You would still decide that you want to go for IFC. Is a lot of it is because of what they bring. And one of the things they bring is just, a stamp of approval. There's a lot that comes with saying that you have been able to attract DFI investment. It says not just a lot about, because of the way their process works. It says not just a lot about the way that you run your business and that you were able to withstand DFI scrutiny, but it also says a lot about the impact story behind your business. And it also says a lot about the ESG story behind your business, the gender story, the diversity story, and you're able to project that. And there's, I think with companies, that's more what they're paying for, as opposed to, and that's why they'll go through the pain of trying to get, DFI capital into it, because of what it says about their business.
Okay, and with that, I think we've come to a nice end to this panel. Thank you so much, my panelists. I think you guys were amazing, and then we learned a lot. There's a round of applause for them as we go on our break. Okay, I think Folarin has one last thing.
Not just realized, but there's a lot of testosterone in the panel. I think the trends and prospects of the African ecosystem isn't peculiar to one gender. It's not just us that know it, right? A lot of it is that, for example, through our programs, we're supporting women, we're trying to ensure ample representation of women in our programs. But I think for things like panels such as this, it's great to have a moderator, so that you like yourself effect, but also be great to hear the other perspectives on these panels. Yeah.
Thank you very much.